Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is market strategist Jeffrey Halley, Senior Market Analyst Asia Pacific at OANDA. Now, Jeff, great to have you on the show.
Pleasure, mate, always.
Now, let's take a look at how markets are performing across the region. We'll start with the SGX. It's down 0.18% at 3,126.25. Bursa Malaysia is at 1,598.16. It's up 0.18%. But across the region, it's mostly red. The Nikkei is down almost 2%, 1.93% at 28,436.67. Shanghai Composite is down 1.22% at 3,369.78. Hang Seng is also down sharply, down 1.9% at 27,954.52. Bucking the trend is the ASX 200. It's up 0.46% at 6,776.4. The Kospi rounds up the numbers at 2,991.61. It's down 0.44%. What do you make of these markets, Jeff?
Yeah, a little confusing. Sorry, mate. I just got something pop up there. Apologies for that for you.
No worries.
Had to happen some stage, didn't it? Look, it seems to be like a pass the parcel market this morning. It seems to be some risk off sentiment sweeping markets, and markets that are dominated by retail traders seem to be suffering more. Nikkei, the mainland China markets, the Hang Seng. Nobody wants to be holding the parcel if the outlook is clouding, and I think that's why we're seeing those markets fall much more than, say, the ASEAN markets, which have actually held up very well this year so far and outperformed because they're much more cyclical and correlated to the global recovery, whereas these other markets are much more speculative, have a lot of very highly valued stocks sitting in them from the March 2020 rally. COVID-19 has fears have reappeared, but they do feel a little bit overblown, to be honest. Yes, Europe does have an issue. Yes, India potentially has an issue, but to be honest, we can't stand in the way of market sentiment, and that seems to be that they're concerned at the moment. Australian markets have probably catching a tailwind from the fall in the Aussie overnight, and that's boosted resource sector stocks.
Now, Jeff, speaking of vaccine expectations and threats from Europe, you've got the dollar that's rallying probably on US growth expectations on the other side of the equation, post-vaccinations. But also, of course, underlying that is the worry about Europe's recurrence of lockdowns and slow vaccination rollouts. What's your read on the momentum for the US dollar?
It seems fairly strong, and I think part of the reason it rallied so strongly overnight, which I will admit caught me by surprise, was safe haven flows. So there's risk, these fears, these COVID-19 fears have increased, and investors have moved money back into US dollars. And we saw some of these short-term note auctions overnight. There was quite a strong bid to cover ratio. So we know exactly where that money is being parked, which is the standard procedure that markets have always done in times of uncertainty and concern, which is buy US dollars and park it in US bonds. So I think we saw some of that overnight. Sterling definitely took a beating overnight as well. If Europe, and that's down to Europe threatening to cut off AstraZeneca vaccine exports. There's been a lot of premium built into sterling assets or UK assets recently because their vaccination program has been going so well. If that's threatened, then they're going to not be on the top of everybody's wish list at the moment. Europe, Germany, France, Italy, Spain, all entering back into partial or complete lockdowns or extending them. It's not going to be good when the powerhouses of Europe are locking down, and that is putting off, of course, their economic recovery into the future.
But on the stock market side, the US stocks slumped yesterday, particularly after the Treasury Secretary Yellen and Fed Chair Powell made a relatively uneventful joint appearance to the US House Committee on Financial Services. Now, what's your take on that appearance?
Was they stayed on message. Mr. Powell remained unconcerned about inflation, which I agree with. It's transitory and evidence of a global recovery, not this wage price spiral sort of inflation. I think what spooked markets to a certain extent were Ms. Yellen's comments that tax hikes were coming for the rich and for corporations to pay for this $3 trillion or partially pay for this $3 trillion infrastructure fund that is being presented to President Biden this week, some of the ideas for it. And I think we'll get more visibility on that, its actual contents next week. Now, multinational, international corporations have much better tax advisors and they have revenues all over the place. And so they're probably less vulnerable to tax hikes than the components of the Russell 2000, which tend to be much smaller, probably more domestically facing companies. And so I guess the feeling was that that burden will more disproportionately fall on them and not these giant corporations that sit in the S&P and the NASDAQ and the Dow. And hence we saw, although stocks came off, the Russell 2000 fell by 3.6%.
One of the things which there's an alternative point of view of is about infrastructure, because the infrastructure spend, while obviously a stimulus, is something that the US actually badly needs in order to catch up with China in so many ways. Do you subscribe to that point of view?
Yeah, absolutely. If you've been to the US and seen some of their infrastructure, you're going, goodness me. So look, I think it's a very forward-thinking policy. It's going to cost a lot up front, but it is preparing the US for the future. So it won't make necessarily an immediate impact in people's lives straight away, but it does set the platform. And I think they can take a lesson from Asia in that. If you go to Singapore or Kuala Lumpur or China, and you see the infrastructure that is around and how easy it is to move around and do business, you can see, but that hasn't been done on a short term. That's been done on a long-term basis as a building block for economic growth in the future. And I think this is what the US is slowly having to pivot towards at the moment. So I think it's a good thing for America. It's not going to be great for the bank accounts of the US government in the short term. And let's face it, these things have to be paid for. So taxes will have to go up. So, but taxes are going to be going up all over the world, not just in the US once the COVID-19 crisis is passed, because government accounts aren't looking pretty anywhere.
Yeah, bills have to be paid for.
It's inevitable. We're all going to be paying more to have survived this year.
Now, thank you very much for speaking to us, Jeff.
A pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.